Hi everyone, welcome to my channel. My name is Carol, and please like our broadcast and please share the link. Please connect and you will definitely learn something in the area of SaaS, tax matters, accounting matters, and so on. So today I want to talk to you about inventory, which is stock holding. And most businesses that are either manufacturing or they are just distributing may or may not keep stock. Some of you may hold stock in a warehouse off base. Some of you may hold it in the same place where your offices are. Whatever the case may be, if you are holding stock, you need to be aware of certain things. Number one, stock is the most valuable thing for someone who would want to steal from you. So you need to have proper controls in place. How do you have these controls in place? Well, you need to do stock counts. If you can do them every month, that would even be better. So you count your stock every month, you record it, and you compare with your expected values. It's no good for you to just count stock and that those figures are not being analyzed, they're not being checked against anything. You would need to be able to say to yourself, if I bought 8 tons of, say for instance, a certain chemical, I've only used 3 tons, then I should have 5 tons when I count. You would then have a system backup that would tell you that. And when you count, you should find the same amount. Any variances between count and the system expected amount then need to be investigated. It's no point investigating things when you've already lost a lot of stock and maybe it's been 2-3 months. However, please be sure that your stock counts are accurate. A lot of the time, people are given incorrect count figures, and that results in unnecessary conflicts, discrepancies, and incorrect figures. Remember, if you hold a lot of stock, the value of your stock will also affect your financials. So, for instance, if you buy stock towards the end of the year, and you haven't sold it, you're doing your financials, whatever you enter as your purchases or your cost of sales needs to be mitigated, or should I use a more technical term, needs to be reduced by your stock. Because what we're saying is you've sold 10 million rand in that year. You've purchased, for instance, 16 million rand. But out of that 16 million rand, maybe you've kept in stock 12 million. So we should then be able to say from that 16 million that we are reflecting as our purchases, we are deducting the stock at cost so that we are only on our financials showing the cost of the stock that has been sold, not including the cost that you're still sitting with in your warehouse. Otherwise, you will show a loss where you haven't actually made a loss. I'm sure from the figures I've given, you can actually see. If our stock is that high, but our sales is not that high, that tells you that there's something wrong. Sometimes it's not even that high, your stock holding, but still, for you to show the accurate figure, you would need to deduct that kind of stock. Another thing you need to do is make sure you are aware of what we call obsolete, slow-moving stock, or stock in transit. If you've got stock that you've already paid for, and it's probably on the sea, maybe on its way from China, or it's still at the airport, it's about to be cleared. Make sure that you're accounting for that stock and you're including it correctly if you've already paid for it. There are ways of making sure that you are reflecting your stock in the various different categories on your financials so that whoever's looking at your financials can tell. This is stock on hand on the floor. This is stock which is in transit. This is stock which is, maybe it's been moved off. It's no longer saleable, that sort of thing. So once you have a handle on your stock, you know your values, you know what to expect, you can then forecast. You can then look at your fast moving stock, sell that, push that first to make sure that you're making a profit. That is one way to manage your finances. Make sure that your fast moving stock or your profitable stock is sold first. Your other stock can always be sold at a later stage. You can also negotiate with your clients and say, listen, I'm selling you what you want, but I've also got the slow moving stock, which if you take, I can give to you for a discount. That way, you're getting rid of all your stock and not being left with any stock. What good is all the stock on the floor? You need to turn it over. You need to sell it at a profit, of course. Have a good evening.